You don't put this shit up.
The terms are arguably not as arduous as some credit cards, particularly when it comes to payment over time and the
Okay. What is that, a healthcare name inside a bind?
OHI, Omega Healthcare, REIT,
Oh, yeah, REIT.
20,000 shares.
Oh,
Right now, getting a little pop here after hours. That's Oscar Hotel, India.
wow. Look where they bought that, too. What's up, everybody? What's up, Chuck? Max? How's everybody doing? Give it a extra minute here. Is it 4:15 anyway? Oh, yeah. Give it just an extra 30 seconds. Let some late stragglers get in. And then we'll start shooting. A lot of underbelly earnings all week this week. Firm up 6. What's a firm been up? I haven't looked at that stock in a while. Wow. Because I know it was doing well. Oh, let me get some of this shit off my screen. Excuse my French. This gone. That off. This off. Okay. So you got a firm popping off numbers. Any other? I mean, I don't have interest in many of these names. XYZ. That's the old square. XYZ down off earnings. I think soon reported today. Down a little bit. Frog. A lot of names. Frog up 10. Wow. The good looking underbelly name, Frog. J Frog. Good looking underbelly name up nice. What else? Anything else? Tandem. Okay, about that. You know, a lot of names that we've played over the last 4 months. I think that Open has reported. That's taking a little poopage. Who is that? What's up to you as well? 1, 2, 3, 4, 5, 6, 7.
Grade to overweight at Cantor.
AB, how are you?
From Sandy Tango.
Hope everybody's doing okay. Having an okay week. All right, let's get rolling. Listen, I know the majority, especially on social media, a lot of degenerates will be more concerned with what Tesla ends up saying today on that vote. But let's dive into it and take a look at where a lot of things stand. Listen, and those of you who know me, and I know, like Struck, many of you I know for a long time now. You guys know I'm the furthest thing from an I told you so type of guy. More especially than any time I have a winning trade and I might have shared an idea. You're asking for punishment from the market gods anytime you cross those lines. But even if you haven't, and I know a lot of people, especially on the newer side, probably don't pay attention to a lot of the things I spew out of my mouth. Because a lot of times when there is concern, that a lot of times when there are things that concern me, I suggest kind of sitting tight, sitting in a high cash position, not doing a whole lot. And let's be honest, not many people want to hear that, right? Eventually, if you hang around long enough in this game, you will want to hear that. I promise you. But if you're looking for action, those are the last sentence you want to hear out of anybody's mouth. Okay. But regardless of whether you took any of this information seriously or, it's just part of a learning process, which I think is just as important. I think you got a good glimpse of how this all unfolded, right? Because again, they don't all shake out the same way. And that's the toughest part about the market. You can see some cautionary signs, some flags go up, and sometimes it takes longer than you may have anticipated to shake out. Sometimes it doesn't shake out all at once. But I think this go around, you got, I think, a perfect description of kind of what were the effects of some of the concerning things that we saw, right? And here's what I mean by that, okay? Again, because you guys know I wasn't necessarily bearish the market overall, right? I wasn't, like some of these guys on Twitter calling for the apocalypse, calling for a crash, calling for 2000 bubble blow up. I'm not that smart. I don't think anybody can call for that shit. So that's why I don't even waste my breath. But a lot of the things we pay attention to, signal-wise, for good reason, were telling us that regardless of what the indexes may end up doing, right? And I think this is where a lot of people get into trouble because they hear some traders utter out of their mouth only price pays and nonsense like that. That means absolutely nothing. But the indexes, right? While a lot of people focus on the indexes and think they can get a good feel, a good tell whether they should be aggressive on the risk side or start protecting their profits and concerned about holding their profits. This, like I said, is a perfect example of how many times it cannot be, right? And a lot of the signals that we pay attention to, without them, you won't be able to necessarily pick up on these things early enough to kind of get out of the way and at the least soften the blow, right? So let me elaborate just quickly for some people who may be newish to the webinar or maybe just haven't even been paying attention. We were seeing pockets of concern, right? It wasn't necessarily market-wide, right? It wasn't necessarily at the index level. And one of the reasons why it wasn't, because we're not getting some information on the positioning side from the government shutdown. So there's good and bad out of that, okay? But what we were certainly seeing, especially on the more speculative side, were a lot of the ingredients of, and as we phrased it, even if it's not a blow off top in a lot of these pockets of the market, right? It's something similar to a March, spring, I should say, of 2021 type setup. Okay. You had a lot of these names, and you just have to go on social media a lot of times to get a good gauge of it. But a lot of people tripping over themselves and chasing names that are up 200-300%, thinking that they just will continue to go higher. And even if they pull back, it'd be something they'd be able to manage or sit through. Okay. And when you see those type of things like we saw in 2021, at the least, you're going to get something a lot worse than that, right? So whether it's a correction and lengthy consolidation or it's a just all-out crash in these names, right? 2021, we kind of talked about how that resolved. You had pretty violent correction initially, and then just a lot of range-bound trading before they rolled over again. So it can shake out a lot of different ways, but that's certainly not an environment you want to be caught overly long, especially if you don't have entries 100% lower than when they're at, right? You certainly don't want to be aggressive chasing into that. So that's what basically we were just trying to paint the picture that even if the indexes aren't at risk of some major correction, there's a hot pocket of the market that a lot of us have participated in and made a good amount of money in, right? That are at the risk of something a lot worse than we would like to be involved in. Okay. And again, I think this is a perfect example because if you look at the index level, I mean, we actually even made a run to new highs here recently, right? We actually just made a new high a week ago. And now we've pulled back for 4 or 5 straight days, nothing too dramatic. But you look at the majority of names you may have played over the last few months on the more speculative side. And I mean, people are catching beatings in these things. I've been talking to people this week. I mentioned it in the Steam Room. And I think it has a lot to do with trading options because more people buy calls now instead of investing in the equity or holding on to the equity from lower levels. They continuously trade calls. And I spoke to a lot of people that, I mean, they're crying the blues this week, talking about catching beatings, throwing around words like crash, where you have an index S&P 500 pull that looks like this and the word crash is being thrown around. But guess what? If you're caught in a basket, right, if you're caught 6, 8 names deep in calls, short dated calls, whatever calls, it doesn't even matter. Short dated, long dated. But you're caught 6, 8 names deep. Just think about, okay, here. You own an Aqua, right? Wherever you may have bought it. Maybe you bought it here. Maybe you bought it here. Maybe you bought it at the tippy top. But anywhere over the last month, and those calls that you're in, it's going to feel like a crash, right? I mean, the equity is down almost $100 off the highs. May not seem like much from where it came from, but that's the risk, right? That's the risk. And again, you look at rare earth plays, right? Anything that we were seeing kind of this scramble and chase. Now, some of the quality names of the spec pocket, meaning that you have a few, very few, that were profitable and had explosive growth on their profits as far as bottom line is concerned. Not all of them were zero revenue companies, right? A lot of those names are holding up a lot better. Okay, but again, there's still that risk. When the air comes out of the group as a whole, there's still that risk there, right? There's still that risk across the board. Okay, so that's where some of the concern really started for us was in, if you remember, in this pocket. Okay, now what happened since then? You had this pocket already. Let's call it this little mini bubble got pierced a couple weeks back. It wasn't over the last few days. The selling has picked up over the last few days, right? But what happened is we saw actually as momentum started to come out of these names, okay, we started to see a rush into some of these larger cap AI names, and not solely on the retail side, even on the professional side. Now, professionals really didn't participate in a lot of the speculative pockets. Right? That's mostly retail. If they participated, more of those names they probably were short in and had to cover because they got squeezed. But where a lot of the professional money has been hiding out, chasing for performance when they're caught light-handed, has been in these large cap, mega cap, AI, Mag 7 type names, right? So what happened was as we were going into earnings season, with most of the professional crowd not having enough exposure, I guess is the better way to put it, right? They didn't have enough exposure in the market as a whole, so they need to chase for performance. Going into this earnings season, you had a scramble into Mag 7 and large cap AI semi type names, right? All the beloved names, okay? Before any of them reported. Microsoft, Meta. So you had that from the professional crowd. And then as retail started to get lumped up in the speculative names, they also started to move and gravitate to those names. Okay, so you almost had like a double whammy, double force of chasing into earnings season in these quality AI names that are just way overcrowded. Okay. That created another problem in the market because, again, now you solve one problem on the speculative side, and now you're going to deal with another problem of chasing some of these larger, more quality type names into earnings, right? They've been getting lumped up of late, some of them off earnings, right? Because, again, a lot of just the complacency out there in a lot of these mega cap names, it's mind-blowing at times. Like, they think they can, a lot of people think they can never lose money in these names, right? They just have to hold on to them long enough. They could just keep rolling, or you buy them into earnings, they buy the dip. And I think you're getting a little different wrinkle this go around. And if you remember our discussion, that was the risk, right? The risk is not every AI large cap name coming out and warning, right? They don't all have to warn. Of course, some of these names are going to have better results than others, but who knows which one, right? You may think you know, but it's a guessing game in my eyes. And there's so many other things to deal with. Like you had Meta, which actually had decent numbers, but they're spending too much money. So that was kind of the risk in that space. And then you had that crowded chase going into it. And you're seeing the price being paid there. Okay. So that was kind of our discussion over the last couple of weeks. Because again, we've been talking about it on this webinar for at least three weeks now, at the start of earnings season, at the minimum. Okay. The good news from what I see right now is that some of the major concern that I had, right, the speculative pocket and earnings risk, those were the two big risks out there in my eye. Okay, if you remember, we talked about it on a risk reward example. Okay, I felt like the reward wasn't there, but now you have added risk because of the speculative bubble and these bubble stocks, and just simply earnings season risk. Right? Yeah, people forget about that, but there's a risk. Companies can warn; they don't always beat and go higher. Okay, so the good news from what I see now is that those two risks that we talked about have kind of dissipated in a sense, right? We're seeing relief there on those two sides. Earnings simply just because we're through the heart of earnings season, right? And a lot of the bigger names are done. And this week was one of the more active names in the underbelly of the market, growth-wise. So we'll be done with that, right? So that kind of relieves the earnings season risk. You also got some nice selling in many of these names, right? Up until today, we continue to see selling. You look at a name like Microsoft, really can't catch a bid here for a week straight, right? Up and right down south. Meta, same thing there. Meta didn't even have that big of a run going in, but these names were just over-owned to begin with. So they didn't really need to see that much buying before they went in. So, again, what I was trying to explain here is that the two risks that really had me concerned going into this earnings season are not as significant anymore, right? And I guess the better way to put it now, what I'm paying attention to, I think what we really want to pay attention to is where the buying may show up, right? Because that's where kind of the hot momentum will probably be. And it's worth waiting for that, because if you jump the gun, especially in this type of market, you can be stuck in something that's out of favor and it's a waste of time. You don't want to be too early unless you see something that appealing on a longer term time horizon. Okay. So we're waiting on kind of buying to show up. And on top of that, I don't think, barring a calamity that is unforeseen here, I don't think there's that much more selling we need to see, just as the market as a whole, before I think opportunities are going to be lighting up left and right. Okay. So again, that's from where we were at the beginning of the earnings season. Okay, how do we portray it, right? It was a perfect time going into earnings season. It was a perfect time to be more concerned about the profits you made and holding on to them than trying to get aggressive and make more, right? At least for the first few weeks of earnings season, until we see how some of this resolves. And I think we're seeing it resolve right in front of our eyes. Okay. Now, again, that's a good thing. It would have been a lot worse, because the risk never goes away, like we discussed, if we continue to see more of the same, right? Where the indexes just chop around, grind higher, and they continue to chase the same things over and over and over again, just inflating these speculative areas even worse than they were. Creates a bigger problem. So I think we were fortunate enough to see this at least start to get resolved sooner rather than later. Okay, so again, that's got me feeling a lot better than I felt 3 weeks ago. That's for shit sure. Okay, so let's take a look at like where some of the things are at, and then we'll talk a little bit about names and groups and just what the issue is here. Because for me, here's the issue right now. If I had to pinpoint one issue, even if I was to feel uber bullish here, okay, on the market as a whole, let's say I felt with conviction there's a floor here in the market as a whole, I still don't know what to buy. Now, look, I get it. All you have different ideas and what you may like and what you don't like. Okay. And we all have an opinion, and that's our prerogative, right? I'm just telling you from myself. And one of the big things is because a lot determined on sweeper activity, right? And where the buying shows up. But even with other, like, I don't see any of the stuff that's being sold off. I still don't have much of an interest in outside of bounce trades. You understand? And for that type of stuff, I need to see sweeper activity, because catching falling knives can always be dangerous, right? But the stuff that I think where the opportunity is kind of the cyclical part of the market. I truly do. Now we're not seeing any buying there yet in any aggressive way. It's still early, right? We're just a few weeks into earnings season, so it's not like there should be already. But to me, that's kind of where I'm licking my chops right now, with this current setup. We'll talk about it as we run through some of these things. All right, so here's kind of what I was talking about here, right? After that blow off scramble in the bubble stocks, right? The zero revenue names and stuff like that. This is what you're kind of seeing going into earnings season. This is Microsoft, and you can see a big, huge green spike right into earnings in Microsoft. This is retail imbalance. So again, I told you about the pros, right? We saw that first, and then we saw retail kind of follow them in. This is Meta. And you can see again, huge green spike in retail imbalance. And you could even get a sense of just talking to people. A lot of people trying or already have been buying this pullback in Meta. All right. Again, I mean, you can't blame them, but a lot of times when that happens, they don't make it that easy, right? There's either more selling there, or it takes a while before the actual lows are in. It may chop around. But a lot of people trying to catch that bottom there because of how violent the selling had been. Okay. But what I'm showing you guys here is the scramble into these things into earnings season. Correlation, right? Again, if there was one indicator to slap on all of this and the risk out there, right? It was a lot of the correlation indicators we look at. Okay. They were all at extreme lows. I mean, this level here in correlation that we keep looking at has been a springboard for an uptick in volatility and a spike in correlation. Right? It's come down here a few times. And we see it here again. Okay, this is kind of where we ended up at the close today. Maybe we get a little bit higher, right? That would be nice. The higher, the better. You know, the selling might be a little more violent that we see in real time, but the unwind of it will be that much better when it comes. Okay, but again, I want you guys to understand, right? The real risk was when this is down here laying on that concrete pavement at the risk of something like this showing up. Right? That's the true risk in my eyes. Because even here, right? Let's say even here you start to dip your beak. Okay? Correlation can certainly go higher from here, and that means vol can go higher and the price action can get worse. But at the least now, even if you're early, once correlation tops and unwinds, you got a good shot of making money at that stage. When correlation's lingering at low extremes and just sitting there, you run the risk of being long and the market's all right, but the stock you're in simple English, there are landmines all over the place. And isn't that like kind of what we're seeing? And with earnings, it's on steroids now. Not just even in a bearish way, even in a bullish way. You got landmines all over the yard. Random landmines. And there's nothing worse than that if you're looking to get aggressive and put on risk. Like I mentioned, I think it's the total opposite of what you want to see if you want to be aggressive into risk. Okay? So this is where we're at now, correlation-wise. This is Sentiment Trader had a nice write-up on correlation, the S&P 500 correlation indicator that we also looked at. Again, just kind of talking about what we discussed, that when you're at these extreme low levels, your win rate goes down significantly and you got negative returns, right? Even if it doesn't mean a crash is coming or a 15% correction is coming, right? Your reward gets eaten away at. So not only do you have more risk, but the reward side of the equation gets chewed at. And I think that's the big problem. And you guys probably have heard, I mean, I didn't even want to throw that in here. I'm sure you guys have heard, because of how awful the internals and breadth have been in the market. You're hearing some of the things like the Hindenburg omen. What's the other one? There's another doozy. And when they cluster up, a lot of people take that as a big warning signal, because usually when you get those clusters, that's when internals and breadth is so awful that they're around major tops in the market. Now, it doesn't mean that this has to be a major top in the market, but you see those clusters. You saw it before 08, you saw it before 2000, because usually you get that type of deterioration in the market before the calamity shows up. All right. Hindenburg, and what's the other one? I forgot the other one. Titanic. Thank you. Titanic syndrome. Those are the best two names for indicators you're ever going to hear. Hindenburg omen and Titanic syndrome. And that's basically what they signal in simple English. That the market has continued to grind higher, but the internals are deteriorating significantly. And you're seeing some of those. We've been seeing some of those signs. This is again, we looked at this many times. This was that blow-up chase, right? In net opening buying strategies in the option world, even eclipsing spring of 2021 and post-COVID days where everybody was at home trading through Robinhood. So that told you a lot right there, right? But you see how even with, and this is before this week, this chart here. Look at the unwind already. Before the market has even pulled back, before anything significant has happened in the market, look how this has unwound already. You know why? Because the names that they were chasing calls in, all those speculative names, have been hammered off the highs. Have been hammered. So you already got quite the rinse already. We looked at this, right? Here's another retail gauge from, I think it's Goldman. Again, just showing that they've given up here of recent after a spike. Liquidity, again, this is not really my bag, but what I was sharing with you guys is that, and this was just another feather in the cap of similarities to back in spring of 2021. The liquidity bros, as I refer to them, people who I follow over the years who follow liquidity and know what they're talking about, have been bringing to my attention a change in the liquidity environment, I guess is the best way to say it, right? A risk in the liquidity environment, okay? It doesn't have to end up translating into a complete debacle as far as liquidity is concerned, but one thing for sure, it's not as abundant as we've been seeing, right? From the April lows. Like if you remember, we talked about kind of a lot of these liquidity indicators were just up and to the right, even before the market made a low. Just shot out of a cannon, right? No news, no nothing. Just shot out of a cannon. And at the least, the majority of these indicators have been kind of chopping around, going sideways. Some a little worse than others. In other words, some pulling back off highs more than others. Now, depending on what form of liquidity you look at, because like global liquidity, from what I hear, China is still pumping decent liquidity into the system, the PBOC. So some of these global liquidity indicators look better than maybe a U.S. Liquidity indicator and stuff like that. But the majority of the liquidity indicators as a whole just aren't up and to the right anymore, at the least are flatlining, okay? Now, flatlining or even coming in gradually, from my experience, is not the end of the world for equities. I've seen the indexes continue to rally even as liquidity has stopped, okay? But the speculative areas of the market, that's where the problem shows up, right? Bitcoin, we talked about this, the crypto markets. And now I think the bigger problem that I wanted to make sure and bring to everybody's attention, even if you don't trade Bitcoin, you have something else to worry about now. And that's these speculative names that we've all been trading, okay? So how this resolves, I think, is really important for that space, okay? Even if it chops around here, even if liquidity ends up just continuing to do more of the same of what we've been seeing, you know, that could just mean digestion at the least for a lot of these more speculative names, right? It can go through a phase of being out of favor, as we've seen from time to time. All right, but it doesn't have to mean the end of the road for the equity markets. And, you know, again, that's not my feel anyhow on the equity markets, because there's a big part of the market that I think has to make a move to the upside before all this becomes a problem. Okay. But again, you don't care about my opinion. You just should care about the signals. More important. This is kind of credit spread proxy, right? So we look at credit market signals. Yeah, I wouldn't say any huge warning signals here, but at the least they're signaling more of chop than risk on. Okay. The market, the last recent high that we made in the S&P 500, there was a divergence with credit spreads and credit default swaps. Okay. But if you look at like the true market, right, like RSP, which is the equal weight, there wasn't there wasn't any divergence. Because kind of like the equal weight's just been foxing around up here. Right? So stocks really haven't gone anywhere as a whole. It's just been certain names that have been pushing stuff like the NASDAQ and the S&P 500 higher. Right? The complete universe of stocks have been more choppy than anything else. And that's what I think a lot of these credit market signals have been signaling. These are credit default swaps. Again, here's that recent market high. And you could see I inverted the credit default swaps. So you could see swaps didn't participate. This is where they are now. Again, the credit market is not signaling any problem, major problem to us yet. Now, why is that important? Because there were some liquidity issues, right? In the banking system, with a few regional banks and stuff like that. Okay. So if there was ever going to be some hiccups, we would have seen some hiccups in the credit markets if that was a concern. We did not. Even stuff like you could see Move has been moving higher. Hey, Move has been moving higher. Here, I don't know if you guys follow this. But again, no big issue, right? It's been coming down quite dramatically. Last few days here has been pushing higher slightly. So again, take away nothing, no big concerns out of the credit market. Just more of a choppy type environment. Okay. And that's basically it. I think that these are some of the main things we've been looking at over the last few weeks. And you can see how some of the stuff is in better shape than where it was 3 weeks ago. And I think that's really important. So going forward, let's talk about, especially for us in the steam room, what we kind of want to see here. If you guys remember yesterday, I put in a note and we talked about on the broadcast, we didn't get enough of a washout internally, breath-wise, to see a follow-through off the squeeze we had yesterday, right? Again, not to say that the rally couldn't continue. Just the rally wouldn't be propelled by a washout in breadth because there wasn't enough. There was enough for a snapback, but that was the extent of it. We got the snapback. So what we would like to see here, ideally, for the overall market, you want to see breadth kind of get washed out, right? That would be ideal for a nice follow through in the indexes and for a broad participation. All right. You could see this was coming into today, like materials are washed out, real estate sector, staples, right? And everything else, kind of nothing going on there. If you get a couple of days of selling, highly correlated selling in the market, you may get some decent washout signals as a whole. And that would be something you'd be more inclined to hold. Let's say if you're long playing for a snapback rally, like some of you have, instead of taking that off the table, holding for a little more of a follow through because you have enough of a rinse behind you. Okay, that on top of some of the sentiment signals, like this guy here, we're not that far away, under 10, and you're going to have glaring bullish signals on some of these things. All right. So that would be ideal. Again, we didn't quite get there prior to yesterday's rally. As you can see, I think it was 13. But, we might be there today. If not, another day of selling tomorrow, you get under 10. And that's usually a good area where even if you're on the earlier side looking for a squeeze, when you get it, you're going to get paid because there's going to be some gusto, right? There's been, enough stuff oversold to when that snapback shows up, it's worth your while. Right? So that's what I would be looking at here's the Hindenburg at the index level. Okay, name wise, again, there's nothing for me to even say name wise because I'm not just going to buy stuff just because it's down in price, right? I want to see aggressive buying come in. What I'm hoping to see is aggressive buying show up in the cyclicals. Again, what cyclicals, I really don't know. I'm not a big fan of some cyclicals. These older cyclicals, they're not the best stocks to trade, right? They're just choppy messes. But that's where I think the big bang for the buck is. Because you got now, what we're dealing with, kind of what we're seeing right now is you have an economy slowing, we think, because we don't have all the economic data. But we're seeing stuff like jobs and stuff like that show cracks. Okay. So you have an economy slowing a bit here, slowing a little more. And you got a Fed that maybe is a little slower to react. But if it gets any worse, right, you're likely going to have a quicker response from the Fed. And that's bullish cyclicals. Right? We haven't seen much buying in the cyclicals. Hell, even the price action in the cyclicals has been underperforming, to say the least. Maybe because the Fed is dragging their feet and this economy's flowing, and the government's still shut down. And we're going to see the effects of that, too. We're starting to see. All right? So you got a triple whammy going on there. But when the Fed comes to the rescue, that's what nobody owns, and that's where you want to be. You understand? So if we do see some aggressive buying show up, even if it's in longer dated strikes, that's where I'm looking to buy and tuck away with a little time. The AI stuff and some of the more speculative stuff, I'm just not there yet. I don't think they necessarily have to get killed, but they can certainly underperform, and they're overcrowded. And if they go into digestion, it may take some lengthy digestion there. You know what I mean? But I'm definitely interested in the cyclicals more than anything else. Now, again, I'm saying just on a risk reward, for looking at it through risk reward. Okay, I am not going to buy any of the cyclicals without sweeper activity showing up. I'm just not going to do it. But that, for me, that's where I'm licking my chops, especially going into next year. Now, I could be dead wrong. The Fed could drop the ball. Certainly could happen. Right? And sweepers never show up. But I think the market as a whole needs them to show up in this space. I think the market is going to have a tough time without it. It's going to have a tough time making much headway on the upside without it. No, at least for now, anyway. For now. The tariffs. I know I saw who's that? Super Gal talking about tariffs. Again, there's just a lot of confusion. There's just a lot of confusion. Now, the way to see through that confusion would be a Fed getting a little more aggressive, maybe on the easing side. And then some of this fiscal juice to start coming in next year, right? From Trump and again. But you're always playing with fire with the Fed. They're always late. They're always late. Like for the Fed, they need to see something break. They need to see a problem before they react accordingly, right? Think of inflation on the way up. There's no inflation. We don't have to worry about inflation. Yeah, but you're too easy. No, it's okay. There's no sign of inflation. And then when they started to act, inflation was already going gangbusters, right? The CPI was already in parabolia mode by the time the Fed acted. So they're more reactive. That's what they do. They save face that way. Well, they're trying to save face that way, I guess. So they have a reputation for that. And I think that's what we're kind of dealing with right now. We were fortunate enough that you had some of these pockets and sectors of the market people had an opportunity to make money in, while kind of this macro backdrop has been You know, that's basically what we've been dealing with. But again, I'm looking, Super Guy, like what I'm trying to get at here, right? Outside of trades, like I'm just talking about outside of trades positioning wise, right? Like where would I want to build a basket of names? So if you rewind, I think coming off the April lows, right? Kind of what we wanted to do. We want to little by little wanted to see names that were catching activity and just pick away at them, right? You like this name more than the other. You like what they do. You like their numbers. Hang on to it a little bit longer. We got time. The only place I really see that right now, that setup, is in cyclicals. That's the only place I see that setup. Now, everything else was extremely overcrowded, if not paced, if not blow off toppy. You understand what I'm saying? And I think that's the risk in a lot of these things. All right. And kind of what we talked about, like you take a name like an Oklo or take any one of them, your favorite name, right? Because the most of them look identical. You know, what do you get here, right? Do you get this? All right, here's kind of that blow-off move, and then you get a correction, then you get 3 months of digestion before it gets its act together. Or, okay, because that already happened 3 times, or was this thing to 200 your blow-off move and game over? Now, I know anybody who owns Oklo, everyone's going to have the same response. No way. That's not a blow-off move at Oklo. That's going higher. I get it. You want it to go higher, but doesn't mean it's going higher. You understand? I truly don't know, and I'm not embarrassed to say that. And on top of that, I think the risk of this being the blow-off move is a lot higher than at any point in the name, in most of these names. Okay? Because people forget that this has all been story-driven. Okay? All been story-driven. Now, no matter how bullish you are in the future of Oklo, a lot of the positive has already been priced in. The stock went from 3 to 200. You understand? So no matter what it's down from 200, yeah, there may be a bounce back trade here somewhere, right? Where let's say it comes down to 100 and it bounces to 120, 130. But that's a trade. You understand? That's a trade. So that's what I think the risk is in a lot of these names. And you guys know my impression on the larger names. I just think everybody owns them already. You know, it's hard to get. I mean, we talked about this way too many times, but it's hard to find sustained upside in mega cap names that have increased their market cap in the trillions, and everybody's already long. And I think that's what you're seeing in these names. You understand? Now, can Meta bounce? Of course it can, and that may be a solid trade, but they're trades. Like, that's where I would focus solely on trading these names now. For now. At the least for now. Because listen, like when Meta started moving here, okay, a lot of people I know thought that these were the names that were just going to continue to go higher. Oh, Meta's breaking out. Remember? Meta's breaking out by the breakout, and they got their ass handed to them. They're not taking into account that Meta broke out ages ago and is already owned by every fund and institution in the world. So, that's my feeling on these things. That's where I think the problem is. Now, a lot of the more economically sensitive type stuff, they haven't participated in the majority of this. Nobody has exposure in them. Now, most of these stocks have been useless. You couldn't make any money in them, but that's why nobody owns them. And if there's a good reason that shows up to own them, there's a lot of money to be made. Again, if it wasn't for that part of the market, guys, I honestly wouldn't be bullish. I would be really, really cautious as a whole. I really would. That at least we need a major, major correction a la 1998, at the least. But I think there's a big part of the market that has a shot that it could be their time, that can really ruin things for bears and hold up the index. Yeah, I mean, Amazon, Amazon kind of was, dead money. So I wouldn't put Amazon in Meta's class. Like, Amazon started the year at 240. It's at 240 now. So again, it's just like Amazon may have a chance to grind higher, right? Unlike some of the other Mag 7 names or large cap names, because it really hasn't done a whole lot of recent. But that it's just too difficult of a question for me to answer. I don't know. Like, think about it. I gotta pick the right Mag 7 name to own. Now, again, that's where flow can be a huge help. Invest-wise, right? If you happen to see, let's say once the dust settles here, right? We get through earnings season, flow kind of quiets down, and all of a sudden you see some Amazon bombs coming in. You want to make the argument that may be more than just a trade. I mean, again, I won't. You understand? You can make that argument, sure. I won't. But there's nothing wrong with any of these names. These names are studs. You understand? These are the best names fundamentally that I've seen in my career. Forget about this cycle. But everybody knows that already, Everybody knows them. They're almost treated at times like bonds, these stocks, right? Because they're so overowned. Like they're a flight to safety when the economy slows at times. So there's more risk in these things. That's, I guess, the better way to put it. I don't have a crystal ball. There's just more risk in them. Now, I think the good thing about a lot of these things, like a Meta, is that it's down significantly now, right? So at some point, there's going to be a low put in and a decent trade, right? You got to believe. And I think that's what we should be looking for in these things, to trade these things. For the most constructive thing that I think can happen for this market is that these names bottom, but as the market rallies back, makes new highs, whatever the case may be, these things are the underperformers. You understand? They don't need to crash, but they just, they're underperforming. They're going to lag the rally and other things, right? And you see more of a cyclical bull enter the fold, and that hasn't shown up in this market at all, right? That's the missing element, right? That's why, for me, it's really difficult to call major tops major top because that element is missing. Now, some have made the argument and gave me the rebuttal, which, I can't really argue, but I don't agree with it. You could have a 2000 situation where the NASDAQ bubble blew, but underneath the hood, there was a cyclical driven small cap value bull market. But you had all the NASDAQ names crash and burn. I don't, again, it's just my, I don't have, you know what I mean? It's just what I feel, but I don't think we're there where they crash and burn. I don't think we're there yet, especially with the Fed starting an easing cycle. It's hard to see that. It's hard to see that. You see that a lot of times when the Fed is hiking, trying to slow shit down. All right. So I'm confused. I'm in SanDisk. I was down 4% the after I started and just I mean, that's a crazy stock. What the hell are you asking me about SanDisk? You think, look at this thing. This thing is insanity. I saw their chip or the commercial bugged me out. Like I didn't even, I know SanDisk from back in the day in the 90s. I don't, it just came public again not too long ago. But yeah, this is insane. Now, again, what's different about these names is the fundamentals are driving these names. Okay, that's not to say they're not parabolic and ridiculous right now, but they're being driven by fundamentals. Unlike some of the hyped up speculative story stocks, right? They have no revenue. Forget about fundamentals, right? So you got names like this, PLTR, Hood, right? The Max 7 names. These are all fundamentally driven. Their earnings have been ridiculous. But again, the problem with these names, what are you going to tell me? That their earnings are ridiculous? Everybody knows that. It's already priced for ridiculousness. You understand? Like, that's the point I'm trying to make, guys, is that you have no edge in a SanDisk right now. You don't know anything that anybody else doesn't know and is not in the stock right now. There's no edge. What's your edge? What are you going to tell me about SanDisk that isn't already in the stock price? You understand? So, like, I don't know. This thing could go to 250 and then be at 180 next month. And it would all make sense to me because this is in La La Land right now. This is in La La Land. But it's a great stock. You understand? This is not a bullshit story stock. This is real growth, real numbers that just are explosive. You understand? But, for me, this is just not my cup of tea here. You understand? Once a stock does this, it's not on my list outside of oohing and on over the stock price. even if I traded it lower, once it does this, like, look, like you see, like a name like this, you know what I mean? Or Irene, they reported today, right? You got some fundamentals behind it. Okay, but still, right? You can make that argument at 15, at 20, at 30, at 40, at 50. If you don't own it there, okay, you playing it up here on a risk reward scale, it's a complete disaster. That's the argument I'm making, right? If you own Irene at $25, okay, and you're still holding it, I don't blame you. You understand? I can't blame you, because even if the stock goes from 70 to 50 and foxes around there for 6 months and then ends up breaking out, right? I mean, you got a cost basis of 25. But, what worries me about all these names, okay, is that, outside of 99, which was a rarity, okay, anytime you see moves like this, they're usually blow-off moves, even for fundamentally strong names, because any little hiccup, any little problem that arises takes all the air out. Here's an example of one. Okay, this is a bad example because this turned out badly. But remember how hot this thing was? And the fundamentals were ridiculous, right? So now, if you're buying it, okay, a lot of us knew and traded SMCI here, SMCI into this breakout. But now, once you're fooling around up here, right? Risk reward wise, this is a disaster. It's a disaster. Oh, that's another group, by the way, where the fundamental, and you guys probably know, the multiples on these stocks aren't even that ridiculous of WDC. That's how impressive their fundamentals have been. Like, what's WDC? Anybody know trading PE wise? I guarantee you it's nothing crazy. I guarantee you it's nothing crazy. Like, these things were significantly undervalued and got re-rated here. You understand? 22, right? 18, 20. So let's say 20 times earnings. It's fundamentally driven. But again, I'm just talking about a stock that's up way too much here. Right? Again, if you own it cheaper, I would hold on to it. I wouldn't sell it, especially a name like this with those type of numbers. But that doesn't mean you can buy these things up here. I don't think it makes much sense. Yeah, so like MU had a crazy run, and it's 30 times earnings. That's nothing with that type of growth. That's why these things are being chased so aggressively, because you got real fundamentals there. You got real fundamentals. Unlike a lot of the other stuff that, again, just it's all story. Again, it's a positive story, but the fundamentals aren't there yet. It's more liquidity driven. And again, you can find exceptions, but I'm just making the point. And you guys know the point I'm driving home. And it's pretty obvious, but believe it or not, especially with newer traders, they need to be reminded. I'm not saying if you own these stocks cheaper, not to hold on to them. Realistically, like if you're trying to catch the next NVIDIA, you have to hold on to them if you're trying to catch the next NVIDIA investment-wise. But that's a far cry from buying and putting new risk up at these levels. You understand? Like for our discussion, okay, some of the concerns that we've had are starting to dissipate. I'm not looking to put new risk in Micron here because some of those risks that we were concerned about market-wise are going away. Like, it wouldn't surprise me that if the market finds its footing and God forbid even cyclicals drive it, that you start to see some profit taking in these things. It wouldn't surprise me one bit. It would make total sense because they're up so much. You know, and their fundamentals may even get better. We saw that with like NVIDIA, right? NVIDIA, I don't think to this day, has it had a hiccup in regards to fundamentals? Right? I think their PE came down, but their earnings went up, if I'm not mistaken, in this cycle here. All right? So a lot of these names, at the least, even the better names, are likely going to run into something like this. Completely normal for the best of names. For the best of names. Right? But what, I think the light here, the light at the end of the tunnel for a lot of this stuff, okay, even if it's too early in some of the more speculative stuff right now, is that even the stuff that, even if they made a major top, kind of like in 2021, you're likely going to find a tradable floor where a lot of these names become range bound at the least and can be traded. And as long as you're trading them, you can find success in a lot of these names still, even if it's a major top in these names. But you got to really be selective of where you're buying, right? But like I use Oklo a lot of times. Again, nothing personal about Oklo. I just use it all the time. But like an Oklo, eventually it finds a floor. It probably chops around. We start to see the flow really dry up. And then you come in the next morning, all of a sudden you see Oklo sweepers come in Uzi-like fashion, and for a trade, you got a decent risk reward there now. Now that's $100 off the highs and found a floor. So I think that's the half glass full in a lot of these areas, even if they're not the same of what they were a couple of months ago. But I'm talking about, like, if you look at, let's say, because you guys know we're always looking, even though I never hold any of these things long enough, but we're always looking, what's the next group, the next Oklos of the world, right? That's generally in the steam room. For a lot of us that are position trading, that's generally what we're looking for out of the flow, right? We trade, okay, but the stuff really where you pick up the money is stuff that you're finding where nobody's in, the sweepers are tipping you off, and now everybody's coming in. So that's what I'm kind of, trying to pay attention to here as we come out of earnings season. And I think really the only thing set up positioning wise for that is these cyclical groups. And because here's the thing too, we think of cyclicals and we think of all the older leaders, right? But when these groups break out in a major way and they lead, like we've seen with a lot of the other stuff, there's an underbelly of that market, of those sectors, that buyers find. You understand? So all these cyclical related groups, the leaders will catch a bid, they'll catch flow, but if the breakout's real, you're going to see it spill over into other names related to that. Right? Again, like the utilities, right? You saw a name like a VST or a CEG, right? These were the names initially that were breaking out and leading. Look at this thing, right? A PWR on the industrial side. And then the confirmation that this breakout was real, you started to see the buying spill down into different market caps within that group, right? So Oklo being one of them. all the way down to the Bitcoin miners that caught a re-rating and became a power play. So if the cyclicals break out in the way that I'm explaining, right, that's what you will see happen there. We haven't seen that happen yet. That's why we have no examples to use. Let me look through some of the comments here. I missed questions or something. I'm with you. Just I don't see it going up this much as the closing bell. Oh, it's the SanDisk. Yeah. Again, there's honestly, I'm just being honest with you. There's no rhyme or reason for these things. You know why? Because here's the other thing you got to take into account. Shorts, they get involved in these things. They like, right? Shorts like to get in and short these things because they were up too much. And then they get squeezed. Right? So you have another leg higher just off shorts getting squeezed. So that's why you get kind of, that's why like to call a top in these things and to catch the short clean is a rarity because of that. You know, FLNC. I remember this name. I think quite a few people in the room played this name, FLNC. This is energy related. Oh, here's your circle. That's where it caught action. Yeah, I don't know much about the name. I just know this thing caught a whole bunch of flow. And holding up well, all considering too. AMPX. I honestly haven't really been paying attention too much name-wise because of earnings. Earnings were today, AMPX. Yeah, I don't know much about this name. Looks like a speculative name, obviously. 15 million in revenue. You know, what ends up happening on the liquidity front is likely going to impact a lot of these names, these story names. Because when liquidity tightens up, no one's interested in the story anymore. You know, but when you get a liquidity rush like we've seen, you know, that's all you need is a story. Yeah, well, like, see, this is to me, this is what I would consider speculative. This is all part of that speculation that we saw. So for me, like, I'm being really, really careful with names like this. You know, if I'm going to buy a name like this right now, the sweeper's got to show up right here, all kidding aside. That's where they would have to show up for me to be interested. Because again, this stock went from $1 to 16 on speculation. Right? So just think about that for a second. You're ignoring it because there have been so many of them that did. But you're buying something that is up 16 times in the last 2 months. It's on what? On what? On $15 million in revenue? You know? On pure hype and speculation. Now, again, I love to speculate, but not up here. Not up here after this bubble just got pricked. You understand? Here's where I want to do it. Does that make sense? You know, what a lot of us, and I'm just not picking on you, Super Gal, just a lot of us, you're ignoring this completely. This move. Here's what you're looking at. Oh, look, you know, this thing has been consolidating nicely over the past 3 weeks. And that's where you see value. But the risk is if the air and momentum comes out of these things, that's your risk. And it's a lot of it. You understand? It's a lot different here where we are now as opposed to 3 months ago down here. Let's say again, if it was starting to catch, or even if it wasn't catching flow and you just liked it down here, from a risk reward point of view, it's apples and oranges. Now, again, a month or two ago, you could get away with buying this consolidation because there was a strong probability because of the momentum and because we were early in the cycle that there would be another rush of buying that would take it to new highs. But now, I think you have even more risk on the other side. Yeah, Hertz is a little different. I mean, Hertz is in that spec arena, but Hertz could be like a hidden value play, right? Value cyclical. You can make the argument. All right. So if the Fed starts cutting rates and they start repricing economically sensitive stuff, you could, see a bid in this whole sector, which has been awful. And Hertz would kind of be a sleeper. But again, the good part about Hertz is spot wise, right? Like spot wise, it's a lot more appealing. Right? You're not buying Hertz here after this 8 hacks. You're buying Hertz down here and making a bet that, cyclicals see rotation. Will find an interest. Yeah, well, and that's, I think, the cherry on top, Sahil, right? That's where you probably, if it ends up becoming that type of play, where you can really end up getting paid down here. So I could definitely see the argument for Hertz down here. But and that's, guys, I look at, and I guess it's a little bit of a few things at this point in my career in this game. I just look at things a lot differently than I used to look at things 15 years ago. 15 years ago, yeah, I was willing to be more aggressive, more of a cowboy, take on more risk. Now, for me, like, risk is almost everything, how I look at things. That's what I look at first. And don't get me wrong, it definitely cost me opportunities in many winners in a bull cycle like we just went through. But it also protects me when things go sour. But for me, it's like risk reward is everything. Like, again, you guys know, ideally, and Hertz is a very close example of it. But I like stuff, like, even if this, ideally, this didn't even happen, it's not even in the screen. I like stuff that is a dead heartbeat, completely dead, right? So it can be at any price as long as it's been dead, the flow's been dead, nobody has an interest in it, and then all of a sudden, one day, sweepers start coming in, accumulating, right? That's the blueprint for me, because that's where my edge is, right? I'm not saying I know something about the company that the rest of the street don't know about or is not factored into the stock already. All right? I'm not claiming to have any imaginary edge out there that maybe I do, maybe I don't. My edge is simply there is no interest in this name, right? There has been no interest shown in this name. no sweeper activity, no flow in this name of note, and then all of a sudden they showed up here. Okay, my risk is what, right? The way I would frame that trade, my risk is nothing happens out of this, and I end up pulling the plug, and in all likelihood, the stock just remains dead, right? My reward is that these buyers are picking up on something that none of us see, and we'll find out later at higher levels. Now, not every stock falls into that blueprint perfectly, but the closer, the better. Right? And that's the edge at a sweeper activity for me. Okay? For me, there is no edge at all, zero. Okay? If Irene catches action up here. Zero edge. Maybe intraday momentum. That's the edge. You can get a scalp out of the buying that's coming in because it creates a little momentum. That's the extent of it. But up here, after all the flow we've seen in Irene, and many of you know Irene, it's a STEAMROOM favorite, right? It's a popular name off all the action it caught. If they buy up here, I ignore it. Think about it. Like, I ignore the action in Irene currently. Right? Why? Because here's where they started going bananas on it. Right? Here's where they started going bananas on it. And look what it looked like then. Right? And that was the edge. Simple. That was the edge. No other edge. That buyers were possibly tipping us off to something in the future that we may not know about. Yeah, exactly, CEO. Exactly. And again, not because Irene did this. I didn't think Irene was going to do this, obviously. But if it didn't, you get out, it's a loser. And over a longer term time frame, you will see a lot more winners than losers off that blueprint. Right? And again, risk reward wise, if that's the case, you're going to come out a happy camper. But like, if I didn't look at this game through that point of view, you know, I couldn't last in this game. You know, just come in and, oh, they're buying Irene again up here. Let me buy it because I think it's going higher. You know, if I did that over since 97, I'm in the game, I'd be long gone by now. I wouldn't be able to last. Especially me, being the degenerate I am. Yeah, you got bears think it's going lower. Bulls still think it's going higher. All right, you got day traders involved. You got call sweepers. You got put sweepers. It's a menagerie now. You got all different things pulling on all different sides here. For futures for us, yeah. I mean, so here's the problem with like futures and like SPX and stuff. They're block trades. So the type of order flow that we like to look at, the aggressive type of order flow, we can't pick that up in the futures market. So in simple English, it's not as clean. You understand? A lot of times, like, you got to know the player personally to be sure they're putting on that order. Like a lot of times, right? Like, think about even the guys who follow VIX on social media. You guys follow the more popular guys. They're down there. They know who's placing the order if they're telling you there's a big VIX buyer. You know, the other crowd on social media that's posting VIX buyers every day and SPX buyers every day, they have no clue what they're talking about. They don't know. Because there's so much hedging that goes on in these things that it's so messy. You know, they're tied to equity, they're tied to this, they're putting on these contraption plays. It's not as clean. That's the problem. But like sometimes you'll see I'll post once in a blue moon, I'll post ES blocks. They're blocks. But I can post that in the room if you want to see it like throughout the day. No, honestly, to read the tape, read the order flow, my opinion, no. No. I don't know anybody who has been able to find an edge reading the flow in those type of markets. It's not, it's hard to pick up. It's hard enough in the equity markets with ETFs. Like look at ETFs. Like it's become really difficult even in ETFs, as you guys know. You guys don't remember, like some of you have been around long enough, you remember SPY sweepers 10 years ago. And there was, I mean, we used to lick our chops. But now with zero DTE and all this shit, forget it. It's a mess. You know, 10 years ago, like I even remember 2016, right? The Bazooka Joe Lows, we called it. Okay. The SPY buying that we picked up on was part of the buying that tipped us off. You were able to see cleaner action there. Now there's so much shit going on, you know, especially with zero DTs. They're sweeping calls. Right? You get an uptick, boom, they're sweeping puts, then they're sweeping calls right back. A lot of the size is, you know, rolls and tied to stock and equity. It's tough. It's really tough. Trust me, I would love to do what we do in names in futures or even in SPX or, you know, SPY we used to. We can't, it's just not the same anymore. You know? But again, I can post that stuff throughout the day if you're curious. It's more for sentiment and bias value a lot of times, that action. You know? Contrarian ones. Like let's say you see some selling and then you see some buying go off in those things. You know, but usually the names are where it's at because that's where you see a lot of the aggressive, clean directional betting in names. Yeah, exactly, AB. That's the problem. You know, and don't get me wrong, there's hedging in names. Right? But there's just a lot more hedging in SPY. You understand? It's a bigger mess you got to sort through. And like, you know, like the point Sahil's making with like an Irene now. There's no edge out of the flow, right? Because it's so active. That's like SPY, right? You got too many hands involved. You got too many hands involved. Too many sweepers in futures would say is no. I don't even think they're sweeps in futures. I think it's all block trading, if I'm not mistaken, like SPX, right? Because it's only one exchange. I'm not 100% sure. You understand? Because sweeping in names. Think about what we're picking up on. Right? It's one thing to have conviction and to just put in an order and buy. It's another thing to have conviction, not only to put in an order to buy, but to buy as much as is out there for sale. Like that's what we're looking for. You understand? Not only, I want to buy XYZ, let me bid for it. We are not even looking at that action in names in the steam room, right? Blocks. You don't see blocks in the steam room ever. we're looking for just the most aggressive type of buying there is, right? Where somebody says, not only do I want to be in this, I want to be in as much as I'm able to get. Yeah. So that's the one big distinction. And that's the reason I don't look at blocks, guys, because what do you think? I never looked at blocks in my career. I've looked, of course I have. You know, as a matter of fact, when I started to kind of look at flow and examine it more closely, that's where I started looking at unusual blocks. But I learned pretty quickly that it was as useless as tits on a bull when it came to making money. You understand? So again, it's a little different than a lot of the other outfits, what you see flow-wise, all right? Like you see many people on social media talking about flow. What generally we're looking for a really distinct type of pattern buying, aggressive pattern buying. That's clean directional betting. Not just buying, that's aggressive conviction. Yeah, again, there are many, there are people who look at all sorts of things, blocks, call spreads, all that stuff, But again, for me, from my experience, again, not to say you won't find a block in XYZ and it ends up going higher, that means nothing. But I know, like, if there's initial buying and it meets that clean criteria that I look for, there's nothing better. You understand? From my experience, there's nothing better. I've seen size blocks turn out to be profitable trades, and I've seen them turn out to be complete disasters, and I've seen them, being touted as a big bullish bet when they were actually replacing equity and were far from even a bet. I think that's the problem with the flow. A lot of people, we can make our bias show up anywhere. You understand? If I'm bullish the market, I can go into the flow right now and make the SPY flow look bullish to you. It's very easy. I'm just being honest. It's very easy. So I try to stay away from that and let the action do the talking, right? Because again, it's more experience than anything else. But when the action's not talking, it's not talking for a reason, and that means I shouldn't be doing anything. When I'm looking for action, when I'm looking to find something to be bullish of, that's when I know I'm going to get myself in trouble. But again, that's me, That's just me. Many ways to skin a cat out there, as they say. All right, but good question, guys. You guys know I always love talking this shit. I can talk for hours. Any last questions about any of this stuff before we wrap it up? Anything I didn't cover that? Oh, Sharpies, right? We didn't even talk about them. So the government's still shut down, and we have no access to positioning in the futures market, by the way. Those of you who are talking about futures, okay? We have no access to any of that. I have no idea how Sharpies are positioned right now anywhere. Now, that's not going to last forever. But again, you want to add another thing to the uncertainty column. Now, if I was to guess, I don't think there's anything too dramatic of a change from where we left off. Because, the market hasn't done anything too crazy since then. But who knows? I'm more actually concerned like VIX, what's going on in VIX. I would have loved to see how futures were set up into the VIX pop, because we know Sharpies were long a pretty decent amount. Did they unravel that yet? But this is a pain in the neck. We don't have that. So again, that's one thing we haven't covered in the last few weeks because we don't have data there. Well, here's what the notable positioning in futures were. You had still a short position in the Russell 2000. Okay, this is a month ago now, right? About a month. VIX, you had a notable short position in the VIX futures, and you had hedge funds short, not in any major way, but short ES. So that could be different there. I don't think the Russell 2000 short has changed in a big way. I could be wrong. VIX, I don't know. I don't know with VIX. So I would love to get that information back, obviously. Especially if we see a little volatility enter the fold here, a little bit of selling. Because that would be a great signal if Sharpies start to add exposure on into that. That would be a great signal. So we'll see how that ends up. This government shutdown, there's got to be, right? There's got to be some resolution in here. It can't go on for too long. Because then the market's going to force them to get on the horse here. You know what I mean? One down week in the market, and you'll see how quick this government opens. Then the same goes for the Fed. All right. I mean, we haven't even had economic data. Like nobody even knows, right? It's been a luxury up until now that you didn't really have to worry about the economic data too much. But now it's becoming a little bit of a concern more than a luxury. Yeah, again, we're guessing. I think that's what makes us more uncomfortable than anything else. Yeah, right. See, airports, they're canceling flights. If you're traveling, you're coming into. Can you imagine if this is into the holidays with the travel schedule? You talk about a menagerie. Oh my! It's already a menagerie traveling during the holidays. I shudder to think what it'll look like. Yeah, people not getting paid. The market's going to be the icing on the cake. You get a couple of days of selling and, they'll take care of business 1, 2, 3. All right. So listen, let's put a bow on it and wrap it up here. Again, I think that the two big risks out there that were concerning are already being resolved. I think that's the main takeaway here. That being said, as we slowly pull out of earnings season, the sweeper activity becomes really important here. It always is for a lot of us, but really important. Because I think even trading opportunity-wise, because of how much some of these things have come in, even for trades, sweeper activity is going to be huge. But yeah, I'm feeling, I could be wrong in this, but I'm feeling a lot better than I felt 3 weeks ago. That's for shit sure. That's for shit sure. Stop! Have a good night, everybody. All right, I'll see the most of you tomorrow. The rest of you, I'll see you guys next week. Enjoy the rest of the weekend, and stay safe out there.